Why stock market? That is because a stock market actually is a very the liquidity is very high. And as we know that if today we invest in the asset classes, and sometimes that we might need some time to catch up the profits. And just take it for instance, it's like we invest in the so-called real estate, and it might take us for a few years, or sometimes it might take us for a decade to just catch up our profits. Then why stock market? Because stock market, the liquidity is very high, number one. And number two, I can say that in the stock market is because the undervalued stock is very easy for us to find. And there's a lot of hidden gem in the stock markets that what we can do is just just go through into this platform and just do some screening and just find out those undervalued stock, which is the company having a very good fundamental, once in a while that we can meet up a lot of good value stock. Yes. In stock investing, that's very easy for us to save time, from my opinions. Why? Because we don't need to actually spend a lot of time to really research for, just take it for instances, for certain products that we want to invest, and we need to learn that on the product. In stock investing, it's very simple, and I call it is the simple, reliable analysis, whereby it's from my books, The Powerful Value Investing Formula, which is talking about the simple and reliable analysis method, which can help us to really find out a stock that match the fundamental, which is the good fundamental. The company is really have a good earning for the past few years, maybe 5 to 10 years, and from that itself, that it can be just in our fingertips. Just turn on our internet, our computers, we access the internet, and we can really go into a certain website and just find out that stock, which I think is very easy. Value investing is very different from speculation. Then, as we know that one of the very successful investors, which is called Warren Buffett, is doing value investing throughout for so many years and making him so rich in the Fortune 500s. And now he become once upon a time when I still remember I was studying in my university. He's one of the richest men in the world. And how he did it is actually he used value investing. And nowadays there's many books and there's many people talking about value investing. And what is value investing is, value investing actually is very simple. Is we go to into a securities, or even like Malaysia we call Bursa Malaysia, or even Singapore we call SGX, or even from US New York Stock Exchange. Then we go inside on those websites, right, or even into that security. We can spend some time to find those companies whereby they have so-called the value, which is the real value is higher, or some people call it intrinsic value, is higher than the price. And that is not difficult to really find those companies, because in the new technology era, everything is in our fingertips. We just need to really do some homework and really find out those stocks and invest on that, because value investing is very different from speculation. Okay, so value investing, we really need to take a look from beside the real value of the company. We are bound to take a look for the company, which is there are literally many things, such as like the company fundamental in their earning, whether they are having a very good earning for the past few years, and the return on equity, for examples, like they're having a very good management team that run the company and to facing for the financial challenges. If they say there's a crisis come, how they're going to deal with that. And there's many things that we can look at. And not only that, and we can also look at the product itself, the company is selling, whether this product is really can create the moat on that really the market itself. And that is called the value investing, that we really have to look at it. That is the most important thing, is that look at the value of the stock. Stock trading, in my opinion, that is we can make money, but not always. Why I say that? Because very successful, our fathers of value investor, which is called Benjamin Graham, he was saying that don't speculate but invest. Why? Because stock investing is like we invest in a company, that a company is really listed in a certain security, in any kind of securities, maybe in any country, and that is really operating, and they are selling their products, they are making money, and that is called companies, right? So it is not like we are doing a paper tradings, like today I'm buying something that is calling that is $1, and I expect for tomorrow they will raise for $2 or $3. Of course, in stock tradings, that is possible for a certain stock for us to make money through trading. For such as, we can take a look for the penny stock, which is the penny stock is selling for a few cents, or even some is selling below $1, and they're having a very good products and even market cycles, and maybe in the market itself currently they are accepting their product and they're selling very well. So because of that, then they might have a chance to make money throughout for years, and because of that, then we can see for every single quarter, their quarterly report is contributing a very good so-called return or even profits, and is making the company value increase and raise. At the end of the day, the price will increase as well. And this is called the ways for how people really use the fundamental to trade. And another way that people trade is using technical analysis, which is called that they are looking for the charts and they're looking for indicators, so-called, that is out there. There's so many indicators. Of course, I will share the indicator as well. This is how we look at just like relative strength index, stochastics, or even we look at the parabolic and etc. There's so many things, and look at the chart patterns, head and shoulder, etc. So that methodologies, right? They can help us to make money, but it's not consistent. That the most important the weight is called consistency. We can make maybe 5 successful trade or 6 successful trade making money. Maybe we're making little money, and at the 6 or 7 straight, number 6 or 7, maybe we're making a mistake. Okay, so we lost a lot of our money, and maybe most likely we can facing the challenges, which is an emotion challenge. Maybe we'll be facing a high floating loss, and will be forces us to think of whether should we let go that stock which is cut losses or not cut losses. So there will be a very big challenge for those who actually is a traders in stock market. I think many of us who faced that before as a stock trader. So in short to say, if you want to be a trader, we must understand there's a trading game plan. We do need that. So without a trading game plan, it's better that we don't trade. Yes, there are many types of financial instruments that can help us to make money. For instances, like we can talk about stock, because I always talk about stock, that is stock investing. That is very easy for me. Why? Because I love to do that because we can just use the internet, and with the computer we can search a good company, like shopping, and find a good stock and just invest into that company. So that's in our fingertips. It's so easy to do that. And number 2, of course, we can do is financial instrument, which is like future trading. Because in stock market, there is one product which is called future. Like in any countries, they will have their own futures, their own indexes. Like Malaysia, we have FKLI. Then we have in Singapore, we have the STI, and in US we have the S&P 500 and etc. That is ETF, Exchange Traded Fund. And that index itself, right? If let's say the index really go up, then appreciate in the prices, then we make money out there. And if it really go down or declining into their indexes, the prices or the volumes, then we will be losing money. Okay, that is called index trading. And how about the third one? The third one is actually we call option trading. Option trading is a lot of people is doing that, which is we buy a stock, then there's 2 types that we can buy a stock and we can write option. Okay, then we can sell the option. That is number 1. Number 2 is we can trade the options. We can call option, put option, all that we can do that. But option is not like stock. Okay, it's not like stock, and it's very different. So it's a different ball game. And we have to understand the rule of the game and how to trade the option. And another thing we call the contract for difference, which is CFD, is quite similar to option. And warrant as well in Malaysia. In Malaysia they have warrant, and we also have like financial instrument we call is that is called forex. Okay, which is forex exchange. That is most of the people they trade forex, they are actually is a trader instead of investors, because they are more looking at the chart patterns and also looking at the short-term movement and to make profit out of that. Okay, so most likely we can say that most people they are making long-term money, they are investors, and making short-term they are actually traders. And of course, there is another instrument we call commodities. Okay, commodities like gold, silver, oil, and etc. that we can actually trade and make money out of that from the financial market itself. And there's many. So this I point out for a few, and I hope that this can help to give you some information on that. And of course, another one which is called the REITs. Okay, the REITs, which is in the stock market. I'd like to highlight a little bit, which is a real estate investment trust. There are literally many companies nowadays they are trying to list to be a real estate investment trust. Why? Because it's so easy for us, and it's so easy for the people who buy and for the people who sell. They just don't need to even buy the piece of property from the open market space. So we just need to buy from the security and just sell away with the right pricings. So that is one of the way that how people trade or even invest in a real estate investment fund, real estate investment trust. So most of the people they're doing the REITs is because they're looking for dividends yield. So depends on what kind of the investment we are, then we to decide that which financial instrument is suitable for us. Evolution of value investing formula. When I found this, I feel so excited about that. Why? Because it's very totally different from value investing and speculators. There are really a compendium between both worlds. Both of these are best both worlds to be one of the best methods. Why I say that is because in stock investing, as we understand that we bound to face a cycle. Okay, a cycle which is uptrend, downtrend, and sideways. So in the stock as well, in a listed company, they will be facing the different cycle. Okay, so we have to find out the cycle and the sector which is right now is really suitable for us to invest or even trade. Then we only go into that particulars of the stock. Number second is in the new evolution of value investing formula is we will be finding the value of which is called the hidden gem of the stock, which is the value. And we of course, although that even we know that value investing will take a very long time, but if we do it right, then we are gained at the right time whereby it still start to move up. The undervalue side start to pick up, then they will be going very fast. Okay, so as we understand, the market is very dynamic; it keep on changing every single day. So we do need to have the holistic knowledge on that and to understand the overall things. So what we do in the new evolution of value investing formula is not only look at the cycle itself or even look at the sector itself, we also look at the value and as well as the technical perspective. Why? Because fundamental perspective and technical perspective is really very important in nowadays, because we understand that many company which is listed today, it might not be listed again in another 10 or 15 years later. Why? Because the technology disruption. So a lot of things will be replaced by technology, and it causes a lot of the company not making good profits and or even losing money, and they start to like delisted from the stock exchange itself. So this is because of the reason. So we have to really look in depth for the way on how to effectively invest in the stock market. Well, in the new evolution of value investing formula, I found for a few methods which is called the SRA, which is the simple reliable analysis. Okay, which is use that method to find a good company which is have a good background, which is making money as well. And of course, the value box trading system to find out the real value of the company and how much it's actually selling right now, and we trade along the way, and that's one of the way that we are using. And of course, I found for a few methods which is called the CRTL, the capital risk trade-off level, which is I think is quite powerful for us to use. This is one of my way to actually calculate to see that if today I want to invest in that stock and I'm only inclined to make for 20% of the losses, and how much that profit I could actually potentially make through that particular stock. That is called the CRTL. And of course, there's many ways again that I found, which is the trading surveillance system and etc. All that I think which is really very powerful, and the three kind of segment market play, which is mean we really need to understand that how insider traders really react, and how the banker is making money, and how the institutional traders really do, how they make their money. And every single institutional, they are very different on their method of trading, and even investing a hedge fund, they are doing different way as well. So we do need to understand that what kind of methodology that we are using. So in the new evolution of value investing formula, we actually making compendiums to make up all the resources, which is all the methods which is available for us, and we have to really understand ourselves first before we really get into the market. So well, the question that I always ask always ask my student will be, what kind of the investor are we? Are we an investor or are we a traders? That's very different. Are we speculating? Are we news traders? Or are we using the different way, which is bonus issue way, or even we're using trading, the short-term trading methods to trade on the stock market? That is very different. So we have to really recognize ourselves first in the first place to understand what kind of the character we have. So there's many ways that we can use to understand ourselves. Of course, it's one of the most effective way that I always use that is found from my side, which is I use is the professional personal profiling re-engineering method, which is I use that to profile ourselves to understand what kind of the investor are we. Then only we move on to really go to invest by according to our own personality, because we understand if today we're asking a traders to go to invest, they don't have that kind of patience to wait for so many years. And if today we're asking an investor to go to trade, they were very nervous, anxieties, and they're scared. They're scared they will lose money because they're seeing that the money is floating and fluctuating for so much that they cannot take it, So their heart beats increasingly, so every single day. That is not a good idea for investors. So that is very different for every single one of us. So the new evolution of value investing formula, which is competing for all the best fundamental, technical, and the real value tool. And not only that, we also have the new methodology which I found just now I'm sharing. Then I hope that all these informations and the techniques will help many of us to make money from the stock market, and looking forward to share with you guys more in my this stock sharing section. Thank you.